Hello everyone. I know everyone is very busy practicing for boards, preparing for boards, very important questions and all. So today's session is completely free of any questions. We are not going to discuss any kind of questions here. Our purpose is to make certain concepts clear before you head for your boards. So today's topic that I've taken for discussion is actually not discussion, actually it's a kind of shortcut, okay, method when it comes to realization account. Okay, so for an introduction, those who don't know the concept of realization account, when it is time for the business to dissolve means what? When it is due to many reasons, you know the word called dissolution of firm. Dissolution of firm means when over a period of time, when the business is going on well, all of a sudden or because of some unforeseen circumstances, they may have to shut down the business. That situation is called dissolution of a firm. So when it comes to partnership, because of any reasons, if the business is getting closed, that situation is called dissolution of firm. So the hereafter partners will not be there, they will not be there, they will leave, they may go and start a new partnership, that is okay. But in the current partnership, nobody will be there, nobody will remain as partners. Everyone will what to say, stay away from the partnership or stay out of the partnership, move out of the partnership, we can say like that. So when it comes to this, in this kind of situation of dissolution of firm, the one of the main accounts that we have to prepare is called realization account. Why that account got its name is actually because of the process that is done through that account. So basically what are we doing here? Those who don't know the realization account, so I'll go very slowly. This video's intention is to make you clear with this topic of realization account, as well as some shortcuts we will discuss for the entries that are related to realization account. Some of you are getting confused with this, I know very well. Some of you are very finding it very easy. So for both the categories, once you go through this video, you will not have any kind of concerns regarding this topic. So again, coming back to the topic, realization account, as I said, because of the process that it takes or process that is being undertaken through this account, that account got its name. So realization basically means we are just selling the assets. On the at the time of winding up, what can happen? Obviously, we will sell the assets, we will pay the liabilities, then only we can leave the business. All of a sudden, we cannot just close the door and just leave the business just like that. So for that purpose, for recording the sale of the assets, for recording the payment of the liabilities, we are preparing this account. Simple meaning, only that is there. So if you ask me to explain it in a very simple manner, realization account is an account that where we will record the sale of the assets as well as the payment of the liabilities. Now when it comes to the contents of this account, we can classify the account into three categories or three stages. First stage, we are going to do actually the transfer of assets and transfer of liability stage. So we can say like this, the first stage of this account involves transfer of assets and transfer of liabilities. I am drawing a line here, as you can see here. Okay, till the point where I have drawn the line, all these things are coming under the transfer of assets as well as the transfer of liabilities part. So when it comes to realization account, first part is, as I said, transfer of assets and transfer of liabilities. When you are transferring the assets, the main thing that you have to remember is we will not transfer cash in hand or cash at bank. So first of all, again, the next thing that you have in your mind is from where we are transferring the assets. Same like the previous chapter, admission, retirement, death of partner and all. In this chapter also, they will provide you with a balance sheet in realization account questions. So if they want you to prepare realization account, they will provide you with a balance sheet. In that balance sheet, certain assets will be there, certain liabilities will be there. From that assets, we have to take all the assets other than cash and bank in general, cash in hand as well as cash at bank. Both you should not take. Other than that, you can take all the other assets. Again, I would like to add one more statement in that when you are transferring, make sure that you will not transfer advertisement suspense account, profit and loss account, all these things from the asset side. So what did I say? You have to transfer all the assets. First I said like this, all the assets other than cash or bank you have to transfer. Then when you are transferring, also apart from cash or bank, you should not transfer advertisement suspense account, which is also known by the name deferred revenue expenditure, and also you should not transfer profit and loss account. Other than this, all the amounts you can transfer to this side. Okay, and next is liability side. When it comes to liability side, all the outside liabilities you have to transfer here. Outside liability simply means the amounts which are payable to the people who are outside the organization. So for example, as you can see here, creditors, they are outsiders. Bills payable are payable to the outside people. Bank overdraft, we have to pay that money to the bank, so outside people. Outstanding expenses, outstanding expense means some amount of expenses we are supposed to pay but we have not yet paid, so obviously expenses are paid to the outside people. Next is provision for doubtful debts. Provision for doubtful debts is not exactly very important amount in realization account. We will just transfer it for the purpose. Just think like provision for doubtful debts is an outside liability. Okay, though we cannot consider this provision for doubtful debts as an outside liability, while transferring all the other liabilities, we will transfer provision for doubtful debts also. You can see here there is no capital in the liabilities. While transferring liabilities, we have not done that. Okay, so remember that. Next thing that you have to remember is outside liability includes the loan that is given by partners, relatives, or partners' friends. So if partner is giving a loan to the firm, that is called partners loan. It is also called inside liabilities, which will never be transferred to realization account. Similarly, when you are transferring partner's wife's loan, when you are writing or when you see partner's wife's loan in the balance sheet, it is an outside liability. So partner, if he or she gives a loan, that is inside liability. Partner's wife or brother, if they give us a loan, it is outside liability. So those outside liabilities also has a role in realization account. So what did I say? First, we have to transfer all the assets. When you are transferring, make sure that cash and bank you are not transferring, and also profit and loss account and advertisement suspense account you are not transferring. Similarly, liabilities, when you are transferring, make sure that you are transferring all the outside liability. Provision for doubtful debts also will come, and partners wives or partners relatives loan also will be coming here. Now if you have observed, assets are going to the left side of this account, liabilities are going to the right side of this account. So when you convert this transferring part into an entry, what will be the entry? How to make an entry? Whatever is written on the debit side of this account, obviously left side is debit side. So when it means that when you are passing the entry for this, that particular account, that means here realization account is what we have made. So realization account should be debited in that entry. So those who don't know how to pass the entry, this is a shortcut. So simple only, if you have written anything on the debit side of this account, when you are converting it into an entry, that account should be debited. That account should be debited. We cannot call it exactly as a shortcut. This is the method in which we are doing it. So realization account debtor to land and building, realization account debtor to plant and machinery, realization account debtor to furniture and fittings. Like this you have to do. Okay, when you are passing the entry for this. Similarly, when it comes to liabilities transfer case, in that case, realization account credit side only we have written it. That means realization account should be credited in that entry. Credited, what do you mean by credited in that entry? When you are writing or when an account, when you can say that an account is credited in an entry, the account name should come after the word to. That means whatever you have written here as creditors, all these things, bills payable and all, those things when you are converting it into entry, realization account should be coming after the word to. That means creditors account debtor to realization account. Entries in an entry, whatever comes after 2 or what, the 2 will come in the second part of the entry only, right? That means realization account will come in the second part of the entry. Whatever you have written on the left side, realization account will come in the first part of the entry. In simple terms, or to make it short, or we can say like that, very easy. So debit side, whatever you are writing, when you are converting into entry, realization account comes first in the entry. Credit side, whatever you are writing, realization account comes second in the entry. Okay, like this we can pass the entries. So that is done. Now second part, as you can see, I will draw a line again in the second part. As I said, relation account can be divided into 3 parts. First part is obviously for transfer of assets and transfer of liabilities. Second part is all about selling the assets and paying the liabilities. So when you are selling the asset, very simple. Okay, if you have not learned this way, hereafter you remember this way, it is very easy. Okay, so selling the asset means you just have to write in the opposite side, you have transferred asset to this side, those asset related sale information will be written on the opposite side. Opposite side, when you are selling, you can write by bank. Okay, I'm stopping there because one more case is there when it comes to assets. So one more, the next case that is related to assets is not selling case. It is about assets taken by partners. Just imagine that you, your friend and another friend, three of your partners. You have recently bought a furniture for the purpose of your office, but unfortunately you had to shut down the business. So while shutting down, sometimes you may feel like, okay, taking that furniture to your house, possible. So if that happens, that is called asset taken by the partner. So in that case, when an asset is taken by the partner, instead of writing by bank means asset is sold. We cannot write by bank here. In the by bank's place, we will be writing the partner's capital account name. So here, suppose if I am the partner A, my name is A. If my name is A, I am the partner who is taking the furniture to my house for my personal use, but the furniture belongs to the business. Then I can write by A's capital, or my accountant will be writing by A's capital. That is the meaning of assets taken by partner here. As you can see here, both have been clearly mentioned. Okay, you can see here, both are clearly mentioned here, asset taken by the partner. So both ways you can record the sale of an asset or asset taken by the partner. Now when it comes to conversion of this entry, you know, by bank or by partner's capital is mentioned means realization account is credited. Realization account comes second in the entry. That means bank account debit to realization account is the entry for selling the asset. Similarly, partner's capital account debit to realization account is the entry for which one? Asset taken by the partner. Hope you understood that part. Now I'll make this part again easier for you. Just think like this when it comes to the entry. So here we'll discuss the shortcut. Throughout this chapter, 80 to 90% of the transactions you have to follow only these two shortcuts. So first shortcut is like this: when you are getting the money, bank account should be debited. When you are selling an asset, what will come? You will get the money. So bank account should be debited. You can just write bank account debit to realization account. One side, if it is bank, means the other side it will be realization account. I'm saying again, I would like to repeat, not for all the transactions, majority of the transactions related to the sale of asset, all these things. Exceptional cases are there that we will discuss later. So this is just to make the main concept clear with you. Exceptional cases towards the end of the video, we'll have a discussion on that. Okay. So now understand like this. So when we are receiving money, you just see, okay, throughout the chapter, you just go through the transaction, whatever the transaction is. First thing that you have to find out from the transaction is, are we getting money? So if you are getting money, you just have to write bank account debit to or bank account debtor to realization account. Now, in the same case, when will we get money? When we are selling the asset only. So instead of selling the asset, if a partner is taking an asset, what changes can be made to this entry? We are not getting any money means bank account will not come. Whose name will come? Partner's name will come there. Partner's name means partner's capital account name will come there. So if A is taking an asset, which if we are selling that asset, obviously we will get we can write bank account debit to realization. In that place, if partner is taking an asset, in the bank's place, you can replace with partner's capital. It's the same thing that we discussed here in the format when you are in the form of converting the entry. So simple meaning is, so throughout the chapter, when they talk about receiving money, we can write bank account debit to realization. You just have to understand the transaction. You go through the transaction and see whether are we receiving money or not. If you are receiving money, you can write bank account debit to realization. Clear? So to make it more simple, I will say like this: whether you are receiving any money from an asset or not, just find it out from the transaction. So if it is like that, you can write bank account debit to realization. If you are not receiving money, partner is taking the asset, then you can write what? Partner's capital account debit to realization. That's it. Very simple. Now coming to the payment of liabilities. Payment of liabilities also happens to the opposite side. Liabilities are transferred to the right side. So payment happens on the opposite side. So we'll be writing similar to this one. When the money is going out, you can write bank there, to bank. Okay, to bank. Similarly, sometimes some partner may say that, okay, I will pay this liability on behalf of the firm, on behalf of the business, I will pay. In that case, what we will write? Same like asset taken by the partner. Here, in the case of place of bank, we will write what? Partner's capital account. Now how to convert the entry? Whatever is written on the left side of this account, realization account comes first in the entry, right? So realization account debit to bank will come when we are paying the liability. Realization account debit to bank will come. Similarly, when it comes to liabilities taken by the partner, what will be the entry? Realization account debit to partner's capital will come. Now, shortcut again. As we discussed earlier, throughout this chapter, we have to go through the transaction and see, are we paying any liability or not? If we are paying any liability, obviously money is going out. So bank account should be credited. Money is going out means bank account should decrease. Those who know the basics of journal entry will know. When bank decreases, we have to credit it. So this is like this. So already one part of the entry you know. The other part will be what? Majority of the cases, other part when we are paying the loan and when you are paying the outside liability and all, the other part will be realization account only. So realization account debit to bank will come. So first entry, first shortcut was what? When we are receiving money, bank account should be debited. One part is clear means second part will be realization account. So anything related to asset, when you go through, if an asset is getting sold, asset is getting taken by partner, always one part will be one part if you got means the other part will be always what? Realization account. Similarly here, when you are paying the liability, first you have to see money is going out or not. Obviously money is going out. Money is going out means you have to write to bank. Clear. So to bank already you know means the other part will be what? Realization account. So realization account debit to bank will come. Now if instead of bank, if one partner is taking that asset, what can be write? In the place of bank you can replace with the partner's name. So if it is AS capital account will come. Simple, very simple. So these two entries only you have to remember for most of the transactions in this chapter. First is receiving money. When we will receive the money, that you should remember, when we will receive the money, when there is a sale of asset. Similarly, when we will pay the money, when there is an expense or when there is a liability, only will be paying money. So this is how it is. Now next is, as you can see in the towards the last part of second part of this account, to cash or bank is mentioned, bracket it is mentioned, expenses paid. Expenses paid means for this process of entire process of realization, there are some expenses involved. It is not a simple task. Selling asset, paying liabilities, and it is not a simple task. It will take some amount of time. So for that, for taking care of all the procedure related to realization, it will carry some amount of expenses. That expenses are called dissolution expenses or realization expenses. So by default, when you are paying money, you already know when you are paying money, what is the entry? Realization account debit to bank. When money is going out, realization account debit to bank only. So by default, realization account debtor to bank account is the entry for paying the realization expenses. We will do a dedicated video on realization expense in detail. So by default, you think like this. By default, normally when realization expense is paid, the entry is realization account debit to bank account, debtor to bank account. So that is how second part is coming. Second part is done. Shortcuts also we have discussed. Third part is profit transferred to capital account of the partners or loss transferred to capital account of the partners. Exactly, it is not like this. We will be writing like this: by capital here or to capital here, and partner's name A, B, C. Same like you are sharing your revaluation loss or profit. So it is like this. Now realization account is a nominal account. What do you mean by nominal account? Same like our profit and loss appropriation account only. So credit side, if it is more, when you are calculating the balance. So first part we have done, second part we have done. When it comes to third part, what are we going to do is, we are going to balance the account. Balance the account means what? We will add all the credit side amounts, we will add all the debit side amounts, and we will find out the difference. The difference amount can be profit or loss. Same like revaluation account. Credit side total is more than the debit side means it is profit. So here also same only. Credit side total is more than the debit side, it is called profit, and the profit should be transferred to partner's capital account. In which ratio? In this chapter, entire chapter, there is no concept like old profit sharing ratio, new profit sharing ratio and all. Only one profit sharing ratio is there. In that profit sharing ratio, you have to divide the profits. You have to divide the profits. So if it is profit, we will be writing here on the left side. If it is loss, we will be writing on the right side, and we will be totaling it. So obviously loss, if it is written on the right side, when you are totaling it, you will get the proper total. That means same, both the sides total will be same. Similarly left side, if you are writing profit, you will be getting the total as same only. Okay, so this is the summary of realization account. Now the most awaited part, right? In the initial part of the question, I was telling there 90% of the questions you can do using these entries. What about the remaining? There are some exceptions, I said, right? Again, we will do further videos on realization account. This is just to give some shortcuts and basic entries, main entries related to realization account. Now, which are the exceptional cases? Exceptional cases means there are certain amounts that we are not including in realization account. As we discussed earlier, only in outside liabilities are recorded in the realization account. Then what about inside liabilities? Inside liabilities means what? Suppose C is a partner, C has given a loan to the business. Then C has given a loan to the business means that loan is not going to realization account. If it goes to realization account only, in realization account we can pay that loan. It is not going to realization account normally. Okay, normally it doesn't go to realization account. So for paying this loan, the entry is obviously bank account will be credited. When money is going out, you can credit bank account, but instead of realization account on the other side, we will be mentioning C's loan account only. This is one exceptional case where realization account will not come, but bank account will be come, right? Similarly, sometimes we may give loan to the partners. We may give loan to the partners means who? The firm will give loan to the partners. In that case, that loan is called loan to partner. So here just take C has taken a loan from us. So in this case, loan to C will be there, and obviously this loan to C is also not an amount that is shown under asset. Loan to C means obviously it is an asset, but when we are transferring the asset, you have to exclude this loan to C also from while transferring the asset. That is why I kept it for the end. So now I will say all the things once again. When you are transferring asset to this account, you should not transfer cash or bank. You should not transfer profit and loss account, deferred revenue expenditure. Also, deferred revenue expenditure means advertisement suspense account. Along with that, on the asset side, if loan to partner is there, that also should not be transferred. Okay. So loan to C, obviously when we have given loan to C at the time of dissolution, C has to pay us back. So what will be the entry? When we are receiving money from C, obviously the entry is bank account that will be debited, same like realization. But realization account will not come on the other side. In that place, we will write what? Loan to C account. So these are some of the exceptional cases where this one. So I have covered almost 90-95% of the chapter in this discussion itself. Okay, rest of the topics are there, obviously other topics, other entries are there, but very rare or very, what to say, those are also very important, but what to say, majority of the questions, if you know this part, this discussion, today's discussion, you will be able to solve. So first we discussed what is the basic entry for receiving money, what is the basic entry for paying money. Receiving money happens when we are selling the asset, so bank account should be debited. On the other side will be realization account, especially when you are receiving money by selling an asset. So remember that part, selling an asset should be there, and we are receiving the money, we can write what? Bank account debit to realization account. Similarly, when you are paying money can happen because of two reasons. One is you are paying an outside liability, one is you are paying an expense. Both, as money is going out, bank account will be credited, and you will be writing realization account on the debit side. So realization account debit to bank, we have to write simple. So expenses, liabilities, outside liabilities is like this. Now when it comes to inside liabilities like partners loan and all, instead of writing realization account, we have to write that account name itself, loan account debtor to bank. Bank part remains the same, but we will not be writing realization account. Similarly, when it comes to loan which we gave to the partner, we will be writing what? Bank account debit to loan to C. We are receiving money only, so bank account we can write, but we cannot write realization here because it is not going to realization account, it is shown as a separate amount. So that is the meaning of this one. So hope you understood today's session. Today's session is just to give the summary of realization account. So please do follow us for further this kind of shortcut videos and all. We will be sharing more tips related to realization chapter and all. Other, as I said, still some topics are left. Realization expenses, different cases are there. By default, realization expenses entry is realization account debit to bank. Other entries are also there. So which are the entries and all, we will be discussing in the further videos. So please check out our videos on a regular basis, so that you will get clarity on all these things. I wish you again a very best for your boards preparations. Thank you.